And now to delve deeper into what this means for the economy, we're joined by Shane Oliver, Chief Economist at AMP Capital. Welcome, Shane. No surprise there, but what does it mean?
Well, obviously, yeah, no surprise, the Reserve Bank on hold. I don't think that means that we've seen the end of interest rate cuts. Our view is that there's still more cuts ahead. I think the reality is that the Aussie economy is still underperforming. We saw that yesterday in the retail sales figures coming in well below expectations for September, which, again, with little evidence that the tax cuts that were put through in the last quarter have had much of an impact. I think the reality is that the Reserve Bank still has more work to do. The Reserve at this stage probably on hold for the reasons that it wants to gauge the impact of those tax cuts, give it more time to work, gauge the impact of the interest rate cuts we saw earlier this year or through June, July, and then of course last month, gauge the impact of those. But I think they've still got more work to do, and so we're still allowing for another interest rate cut come next month and another one in February.
Oh, so you expect a pre-Christmas one, because some think they might wait till next year, but none of the signs, all those things you talked about, the data in the last week or so shows the tax rate cuts were less than expected. Their impact was less. Retail sales have not gone up. I mean, they're really terrible. So all the signs are such, you wonder what they're waiting for, a miracle at this point.
Yeah,
well, actually, the only good... Come on.
You do wonder whether they're waiting for some sort of miracle. Maybe, just maybe, they're hoping that there's going to be some fiscal stimulus come out of Canberra. Or maybe they're hoping that there's going to be a huge dash to the shops as people realise that they have got those tax cuts after all. But so far we haven't seen a lot of evidence of that. And if you look at the data just released in the yesterday, ANZ job ads down another 1% for October, down 11% from where they were a year ago. That points to weaker employment growth ahead, rising unemployment, very weak retail sales figures, as you say. So that to me suggests that we're seeing ongoing softness in the economy. We're probably looking at another quarter of weak economic growth in the September quarter, with the results coming out in about a month's time, and all of that I think is taking us further away from full employment in the economy, which of course is what the Reserve Bank is aiming for.
It's interesting you mention a pre-Christmas cut, because there's a lot riding on Christmas retail sales. Now, if there's a sign, and so far the signs are this could be a disastrous Christmas period, which is crucial for everyone, do you think they might try and do a December cut to try and spur that along?
Well, I think it would make sense to do that. It's interesting, people say, well, interest rates have gone down and yet consumer confidence has gone down. I mean, that's true, but people's, when you look at the surveys, personal perceptions of their own finances have actually improved. So I think what's happened here is that as the Reserve has cut interest rates, that's reminded people that the economy is not performing as well as it should. So in an overall sense, they're not feeling as confident, but their personal finances are improving. And if you cut interest rates again in the run-up to Christmas, the people who are going to be doing a lot of the spending are those people out there with a big mortgage. That will help them. That will certainly help. And so I think it does make sense to do that. I do also think that there is some scope for the Reserve Bank to do something to enable the banks to pass on more of interest rate cuts to their customers. We saw Westpac's result yesterday, ongoing pressure on their profits, ongoing pressure on their interest margins. One way to take away some of that pressure is to lower the funding costs for the banks. You could do that directly by providing cheap funding to the banks, or another way is for the Reserve Bank to undertake a form of quantitative easing and actually buy up bank bills, which would push down bank bill interest rates, which in turn would lower the cost of funding for the banks, given they get about 40% of their funding from at the bank bill rate. So I think there are things they could do. If you wait till February, that's another 3 months away. They don't meet in January, so that's a long time to wait for doing nothing.
Well, it's interesting you say QE. The Treasurer is meeting with the Reserve Bank Board probably as we speak after the meeting today. That is one thing he could be pushing, because you talk about there's more the RBA can do. They keep pointing out it's not all up to us. What is the government going to do? So what we're seeing today, what we saw in the statement, do you think this will only add to the pressure on the government to do more stimulus themselves?
I think it will. The Reserve Bank Governor has rightly been saying we need more help from Canberra. The Reserve Bank, to their credit, have been saying this for many years now, but they've been shouting it from the rooftops lately, and they need that more help in terms of structural reforms to help the economy and more fiscal stimulus. When you're cutting interest rates, when you're doing quantitative easing, that does provide some help, but it is like pushing on a string to some degree. You can't force people to borrow more money. You can take a horse to the water, doesn't mean it's going to drink. But if you do government spending in some way, inducements to companies to invest more, increase in the New Start arrangements, for example, that would certainly help. There are things that government can do that would have almost a guaranteed impact on the economy in terms of boosting spending and getting the economy going again. And you can also do it in a way which is somewhat fairer than just cutting interest rates, which obviously helps people who invest in shares, but not so good for people who invest in bank deposits.
OK, and look, the one, if there is a silver lining or a bright spot, one of the big concerns that's been leading to the rate cuts this year has been the US-China trade war. There's a little glimmer of hope at the moment that there might be some resolution there. I'm not sure if you've seen the whole statement, but do you think that might have also contributed to them holding off a little bit?
It could be. There has been somewhat better news globally in the last month or so. Bit of hope on the trade front, and that's been a big drag on global conditions. Some signs, you could argue, that if you look at business surveys around the world, that in Europe, China and the US, that they might be stabilising at a bit of a bottom there. In other words, there are some signs that interest rate cuts and monetary easing globally is starting to get some traction. But it's still going to leave Australia growing at a rate which is well below potential, therefore unemployment and underemployment way above levels that we really need to see. That it all is going to mean ongoing low wages growth and low inflation, which leaves the Reserve Bank a long way from meeting its objectives.
Oh, it's going to be an interesting pre-Christmas RBA meeting then. We might have got away with the Melbourne Cup. They can keep enjoying it. But as you say, there's a lot more still to do. Shane Oliver, thank you very much for your time today.
My pleasure. Thank you.